Let's take a look at some information and charts on Uniswap for Brave New Coin. So Uni is a DEX with a 50/50 AMM model, the classic, the penultimate, one of the original. Currently they have version 1, 2, and 3 to further muddy the metric waters. I'll talk about that in a second. Sleek and clean UI, directly tradable through Uniswap or any other DEX aggregator, connected with a ton of stuff in the DeFi ecosystem. Definitely a pillar and a backbone of the DeFi ecosystem. Just like any other DEX here, you can look at TVL, price, volume, blah, blah, blah. Most of it's ETH, stablecoins, and BTC. As with any DEX, that's the typical top 5 as far as volumes are concerned, and TVL really as well. The pools will all give various percentages of rewards or incentives, all in that tokenomics conversation, inflation conversation. More important in a bear market than a bull market. When it's a bull market, everybody is gangbusters excited. And when it's a bear market, people start to pay more attention to fundamentals. Stuff like inflation, stuff like tokenomics, vesting, that sort of thing. Really, I care more about the metrics, most about the metrics, because at the end of the day, those help inform my trading decisions. So here's TVL. This is version 3, TVL at 1.8 billion. Volumes have been slipping slightly over the past few days from that May 18th spike into June 15th now, currently almost a month out from that liquidation spike, volatility spike across the board. But in general, Uni carries 50% or more of the entire ecosystem's DEX volume. Now, some of that is double or triple counted if you look at the aggregators and everything else, but Uni's not going anywhere anytime soon. This is the version 2 analytics. Currently has more liquidity, more TVL than version 3. There's been a lot of backlash about version 3. It's complicated nature. I don't even know enough to discuss the issues with version 3 relative to version 2, but from what I'm told, it's much more difficult to use than version 2, and that makes sense just looking at the liquidity, right? The data is telling you people would rather use version 2 than version 3. Volume's also down considerably from really all of 2021 up until May 18th. That was kind of the crescendo of volume, and all of that has declined pretty significantly. Even liquidity is down. Version 3, the liquidity continues to kind of plateau and stay flat. And here's version 1, which still also has 12-13 million in TVL. So my question for all these protocols with multiple versions is, when do we start deprecating or sunsetting versions that are older than the current version, if ever? Is that in the roadmap? I don't know. If we're in version 6, do we have TVL spread across 5 different versions? I don't know. I don't know the answer to that. I don't know what they're going to do, but it makes metrics like total value locked super interesting. When we go multi-version, multi-chain, it gets more and more complex, more and more complicated. What are we looking at? What is the data telling us? According to the DeFi Llama, Uniswap currently at 5 billion. I assume this is mostly version 2 they're looking at. I don't know. They don't specify here. Here's version 3 down here. So I assume that that's version 2, right? But you have to start looking into this stuff deeper and deeper when you're looking at these metrics and you're looking at these leaderboards. Is it multi-chain? Is it multi-version? What is included here? Does it even matter? Does TVL even matter? Here's the bank, which I like because they have this duplicate ratio, whatever, that they tell you gross versus net. And they at least separate out version 2, version 3. Collectively, both of them would be around Maker's TVL, 7.7 billion, something like that. And then if we look at DeFi Pulse, they have it at 6.2 billion, so whatever you're looking at, just make sure you know what you're looking at, right? Like, I don't care what I'm looking at as long as I know that, okay, there's version 1, there's version 2, there's version 3. People hate version 3 by the looks of it. Version 2 was where all the action is at so far, and TVL's spread mostly across version 2. Here's volume in the last 24 hours. Uniswap 52%, and really we can look at daily volumes, but ultimately what I care about is long periods of time. This is monthly volumes across all DEXs that are tracked here. And, pink is Uniswap, so that just gives you some idea of Uniswap dominance relative to even Sushi or 0x or any of these other lesser AMM type DEXs. So Uni dominance has sustained since July, ever since they started airdropping tokens for these DEXs. Uni has always been at the top of this list. They're having individual volumes on Uni that is rivaling centralized exchanges at this point. Specifically for, certain pairs are rivaling centralized exchanges. There was somewhat of a prediction that we'd see this growth, this expansion and contraction of centralized exchanges over time. I don't think many people necessarily predicted this expansion of DEXs over time as well. So I suspect eventually there will be a contraction of DEXs, just as there has been derivatives exchanges in BTC and ETH. Liquidity begets liquidity, as they say. So it's important to watch this and track this specifically for the Uni token price, right? Now, I don't know what the predictive value of volume versus token price necessarily is, but it's a gauge of the ecosystem as a whole, a gauge of, is retail here, are institutions here? Do people care about this thing? Do they think Uni has some value? Are they using the DEXs? Are they trading? Is it working? Is Ethereum costing people too much money to transact, right? Like all this is part of the DEX conversation. We can look at things like TVL versus annualized revenue, kind of a PE type ratio, market cap versus annualized revenue ratio is probably more appropriate for the PE conversation. But when you're comparing Sushi to Uni and you're trying to figure out what are the fundamentals here relative to all of these DEXs or AMM protocols or anything with a token that has revenue, right? You can look at things like this and help guide your trading decisions, because this looks like, if you believe in TVL as a metric, depending on which TVL they're using. So it's almost best to calculate this yourself on any given day because you don't know exactly what they're using here. But if you're just using this at face value, you're thinking, okay, Sushi is relatively undervalued to Uni based on TVL. Maybe I should, buy more Sushi than Uni, right? Like that's one train of thought. Or you could say, Curve looks like it has way too much TVL for its revenue, and that's going to affect my decision in one way or the other. You can also look at, like I said, market cap versus annualized revenue, a PE ratio, type of analog, and you can say Uni sits here, Sushi sits here. I don't have any bias towards one or the other, but when we're looking at all the data together, this is one thing you can look at. At the end of the day, is this going to really matter? It's tough to say, especially if this is supply side versus protocol. Whereas, Maker, it's built into the protocol, it's baked in. It's not based on volumes for the exchange, right? So maybe there's a stronger case for Maker's PE type of ratio than Uni's type of ratio. I think it's too early to know for all this stuff. It's just important to start thinking about it that way, tracking it that way, at least acknowledging this is what the legacy people look at, right? When they're looking at stocks or whatever, when you're talking fundamentals. As far as the token itself, transaction counts continue to decline over time, have declined since February 20th, have declined since early May. They're probably nearing all-time lows. Not a lot of people are moving this token on chain, and maybe there's little to no reason, to do so, especially if price is flat or sideways. It's not necessarily involved in a lot of stuff on chain. It's a governance token as well. I didn't mention that, but you can always assume if these tokens exist, then they can be used in governance in some way. Average transaction value spiked March 5th. I forget why, but it was probably some investing or unlocking or moving tokens somewhere. The average transaction value is kind of cruising around 20 to 30K per day ever since January, basically ever since price has been in this range that it's currently in. Nothing super bullish or bearish there, but you don't want to see active addresses declining like you do here. You don't want to see transaction counts declining. Regardless of what it is, the worst thing an altcoin can do is die in the dark, right? Get delisted. Nobody cares about it. That's why seeing listings on Coinbase, for example, is in general incredibly bullish for anything because it gives people access. It puts the coin in the conversation, right? The recent Coinbase listings are absolute junk, but it doesn't matter, right? It's going to spike transaction counts. It's going to spike active addresses. It's going to spike speculative mania for people who don't have those tokens and have FOMO. And it's going to provide liquidity for anyone who's already in to exit, right? That's ultimately what it's about for a lot of these listings in the near term. So that's why a lot of these, on-chain metrics right now for a lot of DeFi coins look bearish because there's not a lot of action going on. The party's elsewhere right now, kind of. NVT rising and falling here slightly, still sitting at historic highs. NVT is an inverse metric of economic utility, so higher NVT is bearish, lower NVT is bullish. And it kind of says maybe Uni's fair priced here, right? Based on historical NVT values, if NVT matters at all. You know, I'm kind of looking at, I'm probably doing what legacy people do to crypto. I'm looking at DeFi stuff from a pre-DeFi lens as far as metrics are concerned, when the metrics probably don't even matter in the grand scheme of things. You know, I look at transaction counts and active addresses for governance tokens, which don't move ever anyway. Things like Google Trends are probably way more important than on-chain metrics for this, because it shows where the attention's at. You know, it shows that we had this spike on Google Trends in, if I can select it, pre-May 18th, right? That was the all-time high. And now we're way down as far as searches for Uni. What is Uni? Where is Uni? Why is Uni? That sort of thing. So this is another gauge for transaction counts, active addresses, volume, TVL. You know, it's all right here as well. Looking at technicals, if we can finally look at Uni on the daily, there's enough price history here. Basically until the 200-day moving average starts printing. You know, it's too early to look at the daily, but now we've had a couple months of the 200-day moving average. Price has started to find support, attempt to find support on that 200-day moving average. And this may end up printing a descending triangle, which would be bearish continuation. It's already started to print, arguably, inverted Adam and Eve, which is a bearish reversal, bearish continuation, however you want to think about it. You know, if you're bullish, you don't want to see death by 1,000 cuts where, you know, it's not exactly an inverted Adam and Eve, but it's not bullish. You know, it's not exactly a descending triangle, but it's not bullish. It's not exactly below the 200-day moving average yet, right? It's definitely out of this bull trend channel that it was in. And it let you know pretty early in May that, all right, you know, this is more than a dip here. It's starting to look more and more bearish as it falls out of this. And as it continues to hold, you know, below the 50-day moving average even, you know, it's pretty clear where we were from January to May, from May to now. So for me, I want to see Uni recapture that 50-day moving average. I want to see this hold as a bullish 5,200 cross, which over the next couple months may not be the case. You know, ultimately, all of this DeFi stuff can easily retrace back to its January breakout, which for Uni would be 3.8, $5, somewhere down there. A substantial decline, right? I'm not calling this. I'm just saying, look, this is support, right? There's no volume support up here relative to sub 8, sub 5, sub 470. Ultimately, this is the previous consolidation, this November, December inverted head and shoulders that was across all of DeFi stuff at the time. That's where we could be going. There's a monthly pivot support at around $10, $11.50. But where this sits here on the daily is not bullish at all. The cloud is telling you it's below the cloud. So it's below, nearly below the 200-day moving average, below the cloud. You know, you can't be bullish on that, right? Trend is telling you this is not bullish. Until we're above 30.5, then I can talk about Uni to 100, right? But where we sit now, buying the dip is dangerous because look at the downside. The downside is considerable from up here, you know? And right now, being long is just not on your side until we're back above 30.5 on the cloud. Looking at Uni-BTC, it had a bit of a rising wedge. I guess the cloud was telling you be careful in mid-May as well. Now it's in the cloud, still above the 200, still above a bunch of volume here on Binance. But back here you can see this inverted, Adam and Eve, not inverted, but every consolidation typically has something going for it as far as chart patterns are concerned. So really the ultimate support for this is 49,000 sats, anything below that, and it gets ugly pretty quickly with very little volume support until basically a 50% discount at this S2 monthly pivot. So until we're back above the cloud again, things get more neutral to bearish. And as we break this volume level, as we break this pivot, as we break this 200-day moving average, things get definitively bearish. Not there yet, but that looks like where we are headed. Here's the Uni ETH chart below the cloud, below the 200-day moving average, potentially printing an inverted head and shoulders, but the breakout point is very clearly the pivot at the cloud, the 200-day moving average. You can't really get bullish until we're above that, even through that. So Uni's not going anywhere. The exchange, right? It's got 50% or more of volume on any given day, massive volumes on any given month. The version 2, version 3 switchover hasn't been as bullish as maybe the Uni people wanted it to be. Fundamental metrics are still murky and ever changing. We'll see what matters at the end of the day, because TVL could easily flow anywhere at any time, right? Technicals for the USD pair look ready for some extreme bearishness here if it doesn't pull up to above 30. The BTC and ETH pairs look more and more bearish every day, so definitely doesn't look like DeFi season, at least in the near term. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool. Some of my trades do get routed through Uni. We have had Uni in the DeFi portfolio at one point in time, but you can see all the trades I make, everything I do and where, all these dexes. Sometimes it makes more sense to trade through ZRX. Sometimes it makes sense to lend through Aave. Sometimes it's me trading through Paraswap. Just depends on slippage and liquidity. You can see that on May 12th, I swapped Uni for USDC, but we had been holding it for quite some time. I do have the ability to yield farm some of this stuff as well. Mainly that's just Aave related lending and borrowing. And Enzyme is continuing to expand their offerings here over time. But that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.